is I start by looking on the 4-hour chart. So on the 4-hour chart, basically just plain and simple structure. So lower highs, lower lows, higher highs. So obviously for me, this was a point of like a key area. So we had a lower high at this point here, and then obviously price has come up to break that previous lower high, making a new higher high. So then we made a higher low, respecting that area. So obviously for me, this is the area where you start to look for long trades. The second we started to come down into here is when I was like looking around. So for me, the massive confluence in terms of I felt like this trade was going to go for a long was this candlestick alone. So can't really see, it's a bit crappy for that. So that candlestick, like a pin bar, that was like a confluence that the market kind of ran out of steam. And also, it's like respecting the 61.8 fib, which from that last touch on the trend line, lined nicely with that previous resistance, now support, which is again key level. Anything that was like a support became resistance, or resistance became support, is classed as a key level. So when we came down into it, I then entered on. I got in quite late, to be honest, on EURUSD. Originally, I would have liked to have entered in and around down here, but I waited for the 4-hour close. And then on the 4-hour close, we got a morning star formation, which is a bearish engulfing candle, like a doji candle, shooting star, and then a bullish engulfing, which eclipses the previous bearish engulfing. That's like a very strong bias for a long trade or a short trade, you know, if it was basically up here in the sell. So after that confirmation, that's when I entered the trade, because we had multiple confluences. So we had the, you know, test of old support structure, old resistance, sorry, now support structure. We've got the 61.8 rejection. We've got the pin bar rejection, sorry. And then also we've got the trend line, it's nearly a third touch. So for me, I felt like this trade was, you know, was due to kick on. So yeah, that was like my reason behind this. And then me first take profit was 25 pips. Given the current market conditions, it's quite difficult to, you know, get your pips and not get taken out and things like that. You know, I've been letting trades run for 100 pips and it's reversing 100 pips in say 2 or 3 hours, when it's took maybe a day or so to go 100 pips. So I've just changed my game plan. I'm just starting with 25 pips, say TP1, 50 pips TP2, and then obviously if people are still in the trades, like final target was a 0% level, which we are not far off, which is about 106 pips from entry. So yeah, that's just like a little breakdown of how I would personally look at a chart. So yeah, plain and simple, just structure, entering in trade. So previous lower high, seeing if it's broken, taken out. I've got a setup here what I missed CAD-JPY, so I'll go through this one again. You know, it's just clean structure. So we had the higher high, higher low, higher high, higher low. And then obviously we had this key area here. So when we broke back below, you know, there was a chance that this pair probably could have, you know, taken, you know, rejected that previous, you know, resistance. Sorry, this previous support, now resistance, and then come down. But so I'll wait to see how we reacted from here. But yesterday, because I was too busy concentrating on EURUSD, I didn't really, you know, pay attention to CAD-JPY. By the time I looked, it was halfway up here. But yeah, so from today, as you can see, it's absolutely rocketed. But you could even have maybe got an early entry down here in the 61.8. Again, I was talking about like the morning star formation. You've not nearly got it. Obviously, you've not got the bearish engulfing, the doji, and then the bullish, but you got a nice little pin bar there off the 61.8. Then you got obviously a hammer, and then you obviously got a nice solid bullish pin bar. Like that solid bullish pin bar there would have been a great confirmation, especially in the 4-hour, to take a long trade from that point and get in early and just see what happened in and around here. But just to be like extra safe, I wanted to see this previous area broken, retested, which I'll show you in a lower time frame now. So when we came down here, we broke and we touched multiple times, and we got the bullish engulfing. After that bullish engulfing is probably where I would have entered the trade. And it, like I say, as you can see, if I'd have done that, just get that off, you know, up even to the 0%, I would have gone. The 27's an extension, so 0% would have been 77 pips. extension, obviously, which we've nearly hit, was around 125 pips, and my stop loss would have been down here at about 40 pips. Oops. So yeah, that's it really. Just a little breakdown of how I would go through charts. Obviously, if you are, if you want more, like in depth, just message me privately, and I'll always help out. I'm here to help. So yeah, there you go. That's that.